I've always been deeply opposed to crypto.
Last year, cryptocurrency funded every kind of dangerous criminal.
But I would not touch crypto in a million years.
Bitcoin is going to zero.
If I was the government, I'd close it down.
People are losing money in scams and huckster flim-flam artists.
These people who own these things should not own your money in any of those. I do think you're an idiot, okay?
It's over.
Go fuck yourself. Yourself. Is that clear? I hope it is. Is that clear?
What do you...
Hello. Let me make sure my audio is working. Yes, it is. Okay, my mic's working. Yay. Hopefully everybody's having a good day today. Let me switch over here to my portfolio. It got hit again today. I'd say I'm down about 75K. Honestly, I thought it was going to be worse. I did do a lot of buying today. So you can see Tesla took a hit. I actually have like SoFi bounced, Matterport bounced, Robinhood, DLO, a bunch of things starting to find a floor here. I did a lot of buying though. I put about, I want to say $80,000 to work. Let me just hop back. It's over here somewhere. There we go. Yeah, I bought, I think I got some ARKG 2026 calls too that closed, but I got DLO, I got Matterport, I got Cypher, MicroStrategy, ARKG, Tesla, PayPal, more Tesla, lots of more Tesla. It's a little more MicroStrategy. And I sold some Hood today, which has done okay. I think it's up 1.5%, but I'm using it. It's not a multiplier, so I'm using it to buy the dip. And I think I signaled that pretty much yesterday. All right, so real quick, stock market. Let's look over here. So actually finance, we got some decent earnings reports from like Morgan Stanley and a few others. Bank of America was kind of mixed. We'll talk about that in a little bit. They're down 3.56. What's interesting though is today PayPal, especially Hood, SoFi, the Fintechs actually did good. So it's kind of interesting to see them contrast against the finance sector. Things that were rate sensitive, again, today took a hit. Like Tesla was down almost, I think, 5% at one point today, which is why I bought so much in those calls. I think they were down, 12 to 14% or something. Like it was a stupid number. So, but yeah, a lot of sectors that got hit. We did get a little bouncy later in the day, which is cool. If you look at the crypto sector, again, it's still very much, risk off right now. And then we're seeing the same thing. Like if we just look at the weekly view, not much better. So we haven't seen a lot of improvement there. Looking at the S&P, it looks like we closed down 0.21% on the day. So again, even lower. I still think we can drop. I think we could drop maybe just temporarily sub 5 before we bounce. Yeah, smash the likes. Totally, Kevin. What you said. Please do the like thingy and comment and stuff. All right, NASDAQ. So again, I think we started to bounce. It looked bouncy, and then we wicked down pretty hard here. So I'm going to say tomorrow is another drop. I put about 80 grand at work today. I'm looking to do maybe 70, 80 again tomorrow if we do drop lower. But I could see maybe going to 17,300 on this, just like I could see testing, sub 5,000 for a second on the S&P. Thank you, BD. Thank you, guys. So the Russell, too. Again, we're getting closer on this one, and I kind of said this. Even though this was the worst performer out of the three indices today, the NASDAQ just barely was up. S&P was down 0.21%. The RUT was down 0.42, but like I said before, I think it's going to start finding support. So its underperformance will probably turn to outperformance here soon because we're getting to the 200 moving average on the weekly, and maybe we get to the 50 at again the 1900 range, a little bit around there, but I don't think we would get much lower. I really don't. And the reason that the Russell is getting hit in small caps is because again it's that whole narrative in regard to rates. Rates being something that it doesn't look like it's coming down. And I did a video today that had Jerome Powell speaking with one of his Fed counterpart in Canada, and they were asked a bunch of questions. The gist of it was he said that inflation came down a lot last year. It's little changed as of recent. They need greater confidence in order to be able to think about lowering rates, and that recent data suggests that they're not confident in their ability to lower rates, and that they should leave it in a restrictive state, which is not super great for my thoughts on a June rate cut. But we also have a couple more months of data points between now and then, so we'll see how long that holds up. I really do hope that we become more dovish on rates, because we're killing a whole bunch of sectors, and you'll see that in some of the economic data in a second. Now, to oil. I should probably turn this red because it doesn't look like we're going back above this. So again, we did try that breakout. We tried that breakout, early April, about 10 days ago, and we've tried to go above it a couple of times. There is still threat. It sounds like Israel's going to have a retaliatory strike against Iran by this weekend, is what I heard last, unless you guys have heard anything else. So could we see another spike and try and test above this resistance line again? Sure, but it doesn't look super great. And on the daily, again, we already hit, 75, 76 almost on the RSI, and we've got divergence here trying to push us down. A little bit of convergence too. So we'll see what happens here, but I think we're starting to reach the overbought territory, so it'll need to be pretty significant for it to go higher. The dollar is up 0.14%. So again, it's still showing a little bit of strength, albeit it is slowing down. So there's a chance that we could start to see more weakness here as we have, again, divergence to the downside here on both the RSI and the MACD, where it wants to pull this down. So if we don't see anything crazy geopolitically over the weekend, maybe we get a break. The MOVE index, and I'm going to show you something about this in a second, but just talking about global liquidity and how the bond volatility going up a lot does not help global liquidity as people go for higher rates. So that sucks, and hopefully we start to break down here. We are at the 200 weekly moving average. I would like to see the week close underneath this orange line right here. I've got to update some of these colors because they're a little off. But yeah, this orange one right here, I'll make that thicker and fix some of the coloring on the rest of this. But we don't want that to go a lot higher if we want to see the numbers go up soon. I think that we could have a little more pain this week, but then I think it's time to start flipping around to the other side. We'll see if I'm right. Fear, we're pretty much in fear. I think we got down to 38. I don't know if we got lower. Doesn't show it right now, but I know we did hit 38 earlier. I got an image of it. So you can see where, again, we're starting to find like this other trade range that we had for the fear and greed index. And so that should actually act as support. And could we go into extreme fear? Possibly, but it won't last for long, I don't think. I did want to talk to this. So there's a B of A research report that said selling could continue early in the week, which it has. And gamma is at risk of turning short below 5,000. So what they're indicating is if the S&P goes under 5,000, then we could see, a gamma squeeze, and we could see further pain. And I would agree with that. I think that's true. Here's another one from Ryan Detrick. He said 23 of the past 44 years saw the S&P correct 10% or more at some point during the year. 13 of those years finished higher, up 17.5% on average. So what he's saying is, the majority of the time this has occurred, it's been higher. We'll see if that plays out. Brian Feroldi said, "Think you're bad at timing the market. So are CEOs." I know a lot of people reference how CEOs are selling stock. This is just to represent that, yeah, CEOs aren't necessarily great either and tend to sell at the wrong time. and not be great at timing the market. I mean, I think some are better than others. I think Elon's probably better than some of these guys. But again, they're not so great either. All right. Bank of America actually did all right, but there's further problems. It's just their non-performing loans. And I think Crossroads, Rory had talked to this. He said, scariest thing about this is their loss provisions for CRE, commercial real estate. If I'm reading this right, they basically presume soft landing and made no specific loss provisions for CRE write-offs at all. That might be why they're getting slapped because of poor risk management. Now, this is a pretty big bank, and Powell said that he's been talking to all the banks and he understands, what kind of risks they have in regard to commercial real estate. I think Papa Powell will be very quick to cover Bank of America. I don't think he's going to let anything happen with that. But again, it just shows how commercial real estate is being a drag on these banks. The ones that hold a lot of it are getting crushed. It's not great for them. My buddy Open Skies, she's an Aussie, very cool lady. She put up this chart, which I thought was helpful. It was from B of A. It was about from their global fund manager survey. It says, chart 1, expectations for no landing surging. What is the most likely outcome for the global economy in the next 12 months? As of late, people think that no landing, that's starting to pick up steam, whereas like January it was 7% and people thought we were going to be good. Now we're at about 43% hard landing, no landing, and soft landing is at 54. So the gap is closing and people's perception is changing and it's becoming more pessimistic. Seth Golden's got a good one. It says, market is like a child who throws his or her toys out the window on Monday and then spends the rest of the week picking up and bringing them back inside. It's kind of true, and it just shows average return on various days of the weeks. And you can see that Monday isn't great. I don't know if it's just because people haven't had their coffee, they're in a bad mood, whatever. Even though for periods of time, those will shift around and you might like sell off into the end of the week and then, but you bounce on Mondays. That was a thing for a while too. All right. And then, to touch on the MOVE index again, my friend Michael Howell from Cross Border Capital posted this. It says the MOVE index versus change in world collateral multiplier. So he said, yep, you guessed it. Big jump in the MOVE is not good for global liquidity since collateral multipliers drop. This is true. And again, so we want to see the MOVE index and basically bond rates start to top out and take a pause and start to die back down again. So we'll be watching the MOVE index very closely. This one from Unusual Whales. It says JP Morgan. Oh, let me do this. It says JP Morgan has made the case that high rates are actually driving inflation per Bloomberg. I got to look more into that. It doesn't surprise me though. Costlier mortgages are spilling into rents. I think I was having a conversation with somebody about this, and I think I posted it in one of the market recaps recently, where higher mortgage rates are going to spill into rent because these guys are paying a lot of money for these places, and therefore they have to increase rents. And it's not just that, it's taxes, insurance, all this stuff has went up. And so the higher rates are going to cause more inflation. And I don't know how long it's going to take the Fed to figure that shit out, but it is a thing they need to figure out. Housing starts. This is no surprise to anybody, I'm sure. They suck. And they're at really horrible levels. And housing is at like 20, 25-year lows in most metrics. And it's only going to get worse. It's not going to get better. So rates need to come down or housing and auto is going to get fucked. And I'm going to show you some Tesla insurance numbers out of China that will, correlate to that pretty good. S&P 500 monthly performance during election years. So this is just showing that during election years, it doesn't do great in the beginning and could even, this is contrary. So this is so weird because it's so different than what people say. There's this saying, sell in May and go away, right? During election years, people might be selling, but that's the absolute wrong time to do it because over the summer, they actually do well on average. And then in the latter part of the fall to winter, I don't know, maybe it's just people get worried because of the election and who's going to get elected and all that kind of shit, but they tend to sell off. And so, again, the averages in election years are the opposite of what most people would tell you to do, which is fascinating. All right, real quick, before we get into our metrics on the economic data, I want to talk about the stuff with China last night, because I saw really wild narratives from Bloomberg especially, talking about like, hey, China's doing great, China's getting their high rate of GDP, you know, look at China, it's getting better, it's going to bounce, blah, blah, blah. But first off, GDP growth rate and GDP data out of China is complete and utter bullshit. It's an aspiration. It has nothing. It's not an output in any way. So that's something you need to make sure you understand. Also, the unemployment rate is also bullshit and highly modified and manipulated and not even worth paying attention to. These are some of the metrics where they took away all the underlying data that correlates to them. And like when I tell you that 90% of the economic data since the pandemic in China has just disappeared because they've stopped publishing it, the stuff that would correlate to like being able to gauge GDP, being able to gauge unemployment, all those metrics are gone. So they're just blatant lies anymore. Now, there's other stuff, though, that does have correlations to it, and it's harder to mask. And we're going to look at some of those metrics right now. Like the house price index. This is China's newly built house price index. And you can see what's been happening now for years. And then more recently here, we've just been in deflation for new homes for over a year and a half we're heading on now. Now, these are still bullshit numbers, though, and probably overly positive. But again, China, the only reason I'm showing it is China is in deflation, and I want that to be clear. China's China's industrial production grew by 4.5% year over year. It's actually lower than analyst expectations, and the previous number was 7. So this is a number that can also be, I'd say, modified, but not to a great extent. And they are cutting back. The Chinese government is cutting back on a lot of industrial expense, especially across provinces. I think I don't remember if it was 1/3 or 2/3 of provinces have stopped all their major economic development, like, you know, the trains, the infrastructure, all this stuff. They've stopped because they're borderline bankrupt and they just can't pay for this stuff anymore. Now, retail sales are in decline in China again. And again, I'd say these are overly optimistic. They look like they'd bounced into 2023 and that they're looking good. But the path is really down. And they were lower than expected, lower than forecast, lower than consensus, and lower than the previous reading. So the data in China consistently points towards bad things. Now, fixed asset investment still exists in China because they're desperate to reboot their economy. So they are putting money into it. I don't know that it's doing anything anymore. It's just keeping these local government financing vehicles and really just the local provinces afloat, most likely. Industrial capacity utilization has dropped to levels not seen since the recovery in the pandemic. So kind of the opposite of what's happening here, where we have more people working. In China, again, it looks like there's less. All right, we'll ignore all the housing data. Well, I mean, we just might let's just scan it, because I mean, it just looks like shit in the United States here. But let's take a look at it. So housing, United States building permits, probably one of the only good things in housing data right now. Again, it's been recovering since 2008. Even after the pandemic happened, it kind of had, you know, a golden time where it recovered a lot for building permits. And then it started to drop down when rates tightened. But it's been slowly trickling up. And if we look here for March data, it says forecast 1.51 million. We got 1.5 or 458. So again, underperformance, going to continue to happen until we actually start to fucking do something about rates, which we need to, because a JP Morgan study says that high rates are actually inflationary. Isn't that funny? You can actually make it to where housing is becoming more expensive because we have an undersupply and we have stupid fucking high rates. So, and that's a big metric that affects a lot of stuff. All right, so housing starts. Where we end up. Forecast 1.51 million. Consensus 1.48. We only did 1.321. This sucks. This means housing is going to become more unaffordable. And with rates staying high, it's just going to fuck the whole market. Super cool. Super cool. All right, Red Book year over year. Again, this is retail sales. It's a survey of like the top retailers, thousands of them. They get a sampling of it. It retracted a little bit here, 4.9%. Previous was 5.4. But if we go back here, that's actually been pretty decent since like mid 2023, where we had a strong downward trend towards the middle of half of last year, and now it's slowly been recovering from the retail sales side of things. So it doesn't look bad. Let's say capacity utilization. Capacity utilization is the rate in the U.S. edged up 78.4% in March from a downwardly revised 78.2 in February. So it actually ended up a little bit weaker than we thought in February, but again was up. The trend was up, slightly below forecasts. For manufacturing, moved up 0.3%. So this is good. We want to see this. We want to see a tick up in capacity utilization. We don't want to see it dropping down. And again, you can see just a massive fall during the pandemic. So it looks like that's trending in the right direction. Industrial production year over year. It says 0% actual for March. They forecast 0.6. The previous one was negative 0.3. So not a great number. Still kind of flat, almost borderline, disinflation. Manufacturing production year over year. This actually did a little better, beat the forecast, up 0.8%. So this is good, at least. But again, kind of the trend with manufacturing and industrial has not been super great. If we look at a lot of the data points. So, but today it looked all right. A lot of this stuff looked all right. It looked fairly strong. Again, just housing getting crushed, but retail sales. Capacity utilization and industrial manufacturing production, not horrible. So showing some strength. Tomorrow, we'll have more mortgage-related data. And then we got some foreign bond investment, net capital outflow or capital flows, a bunch of like inventory for energy. Nothing too crazy. Foreign direct investment numbers come out tomorrow night for China. That should be interesting. That's been a shit show. I can only imagine that continues. Let me do this. I want to pull up a few other things here real quick. Just look at other bookmarks, and then we'll get done with this. Real quickly, investment basics. I wanted to say a couple of things, right? Just of what I've been seeing in the last few days. All right, right here. Let's start with this. I put few understand this. This came from FSD Maestro. He said, that is one inherent advantage to diversification. You can always sell profits from one stock to purchase the dip in another. If you're all in on one stock, you're stuck. So yeah, I would agree with this. Again, the gist is that if you have plays that are pointed in different directions, then you might be able to use one of them as a source of funds. For me, I had made $500 to $600 off of Hood already with my options play, which was great. And then I owned some stock, and the stock went down. I think it was down like 5-6% when I ended up selling it in total from where I purchased it. But I used it as a source of funds to be able to buy things that had really dropped hard. Like, again, Tesla calls for June 2026, MicroStrategy, some CleanSpark a little bit today, and then Cypher. Just things where I have more of an asymmetric bet to the upside. And I've already done really good off of Hood. Will I buy back Hood again? Yes, but I'll let some of these other things do really well, and then I'll just kind of move some of the funds and let it flow back and forth and slosh back and forth. But if you don't have anything else and you're all in on one thing, the whole market could be doing great, and your one thing could not be doing so good, and you could be fucked, and you just have no alternative. You can't reallocate capital between the outperformers to the underperformers that you know are going to do good in the future. So I think that's a good message, and I wanted to point it out. Another one. Somebody said, what's the secret of being able to stay positive during times like this? And I said, weathering a lot of storms. When you've been through the markets and lost shit tons of money and fucked up really bad over the course of decades, I don't know, the psychology gets better. I also would say this, it's not just this. Also up here, I put, yep, the psychology that goes along with that is painful. This person said that they basically didn't have any more money to spend, right? And just watching it go down red day after day is painful. And I would agree with that. It's totally painful. It's the exact opposite feeling of having money and capital and being able to buy the dip. So today, I was loving it. I was having a great time. Not everybody probably felt that way. Remember this in the future, that if the tide looks like it's turning, if things look like they're doing bad, again, a couple weeks ago, I took out $750,000 from things that were more asymmetric multiplier bets like Hood that were options. $250,000 of it came from Hood alone. And so I didn't have to ride that train down. I didn't have to ride the miners down because I took out like 350, 400,000 in miners plus more in MicroStrategy. And so I had, 50% of the position in CleanSpark that I had, before that 2-week period where I had taken all that cash. So I've just been able to buy the dip and it's been fun. But when you have none and you're greedy at the top and you're starting to see that things maybe could roll over, it doesn't hurt to take some cash. You don't always have to be all in. Did you ever speak about what led to? Yeah. Bankruptcy was me in 2008, not ever working with options before. Still being pretty naive to investing, not understanding macro at all, and going all in, taking out credit cards to go all in. And then this cool thing happened. It was called the 2008 Great Financial Crisis. And it was gone. It was all gone. Had all the credit card debt. Didn't have the money or the investments because they were all long options. So I learned a valuable lesson about diversification. And again, it's why right now my option plays are making up, I think, about a 20% or maybe 25% position in my portfolio. If they turn to dust, well, I can't say that. My shorter dated options plays make up about 20 to 25% of my portfolio. And then for crypto and Bitcoin related stuff, I have none right now, is because I want to reduce that risk. And when I'm going into my options, I'm looking at like January and June of 2026 right now, giving myself, on average, a couple of years. So you do have to learn from your mistakes, man. And again, that's why I had hedges. I've sold out of a lot of my hedges, but I've had hedges with Starbucks and Best Buy just to be able to capitalize on downside too. So it is good to think in all directions. I highly recommend it. But that was my story on bankruptcy. It was some bad decision making. But you know what I learned from my bankruptcy? I learned that I could keep my house. I learned that I could keep a bunch of cars. I learned that I could keep everything in my house. I learned that I could keep my 401k and IRAs because I'd never withdrawn from them. And then I learned after my bankruptcy was over that I was able to buy my wife a new car with like a 4% interest rate. And the lesson I learned from bankruptcy was it's actually pretty easy. I don't want to say that because I don't want to encourage it for anybody. But I do think there's a lesson to be learned there. I think it's that America is designed and capitalism is designed for people to be able to fail and not have it destroy them. If you lived in China, you would be destroyed. There isn't a really good bankruptcy system for individuals in China. So governments certain companies get bailed out by the government, but if they don't care about you, you're fucked, and individuals are routinely fucked. But we live in this great country where you can do stupid shit, you can make mistakes, you can learn from those mistakes, and then you can rebuild. And so I don't want to be too cynical, but the bankruptcy was super easy, and it taught me that you can fail in this country. You can fail and you can start over. It's designed for people that are starting businesses. It's designed for people that are allocating capital and trying to, find a better life. It's designed for it to be okay to fail. So that's what I took from that. But yeah, so I wanted to say this here though. I said, the psychology is painful when you don't have money to buy the dip. I said also, some investments are better than others. So reallocating to heavily beat up higher beta investments on a downturn doesn't hurt either. And what I meant by that is some of these, like the MicroStrategies and I believe the Bitcoin miners, are going to have rocket to the upside potential when their time comes around. I think the Tesla calls are that way too. So again, taking money out of like something like Hood that doesn't have that multiplier and slowly dialing into things that are going to have a multiplier and that give you a lot of time for things to play out, I think are really beneficial. So wanted to talk to that, just some investment basics and things that I wanted to discuss and just make sure you guys think about. Let me see. I didn't have a lot in the Bitcoin front. I did want to talk a few things about Tesla. Let me see here. All right. Over the past 5 years, Tesla is the second best performer behind NVIDIA. I don't know. Remember that? Maybe. Maybe your timing wasn't perfect in this, but maybe remember that Tesla was the second best performer over the last 5 years between Google, Apple, Microsoft, Tesla, and NVIDIA. It was right up there. So it will be back again, and it will be the top performer, I believe, eventually. Might take a little bit for it to get past NVIDIA, but I don't know. I don't think it's more than 2 years. Because eventually we're going to move from picks and shovels to the service of the AI. All right. I also wanted to show this. I think this one was from yesterday. I don't think I showed it. But it says Tesla employee reductions. It says 2017, 2%. 2018, 9% of staff. 2019, 7% of staff. 2022, 10% of staff. 2024, 10% of staff. Tesla is totally doomed. And then he shows a graph of revenue in Tesla over that period of time. So you guys should be scared. The sky is falling. 12.34 is going to be rolling out. I think that's super exciting. I can't wait for it. Now here, I did have something scary about Tesla in regard to numbers, and it all comes back, sorry about that, it all comes back to China. Tesla China insurance registration numbers, you can see 2023, you can see 2022. If you look at week 14 and 15, really a lot of these last several weeks, but especially 14 and 15, you'll see that in 2023, we had like almost 7,000 registrations. It was a big jump, right? But this time around, we got 1,900, so a 73% drop on week 14. Week 15 in 2024, only 6,000, whereas 2023 was 12,500. So these are still not great numbers. Somebody in the comments tried to explain it away by BYD and Xpeng are doing so good, but it's like BYD's EV numbers were down 43% year over year, worse than fucking Tesla. And they're switching to hybrids. So fuck all that bullshit narrative. That doesn't mean anything. All right. I think that's it for bookmark stuff. Let me pull up some of my favorite things and we can look at their charts and then we will get over to your guys's and I'll try and get over to comments here. Start reading some of what you guys have to say. So Tesla, real quick, let's look at that. So it closed down 2.71%. Actually did get, it wasn't a bullish hammer, but we got a little gap that we formed here. Probably going to need to draw that out. Let me get a little box over here. So now we got a box, we got a daily gap that wants to close in the future on Tesla. Maybe it could be tomorrow. I don't know. Probably need to turn that green though. I don't think I'll remember what that color is. All right. So that's cool. We got, again, daily gap, daily gap, daily gap. We know these things are going to close. Somebody said, well, what if we go to 69 and it stays at 69? Dude, I can't fucking help you if you believe that shit. So, sorry. Don't buy it. Or sell it to me if you own it. I think that's the best for everybody. So, again, I think we can go lower. I think we can go lower. We might not be. Let's look at the RSI here on the weekly. Something important to notate is that it's getting low. It's getting real low here. We're nearing oversold territory on the weekly time frame for the RSI. And here's what's also interesting. You can see that we've established bullish divergence on Tesla's price here, going all the way back to January. So even though it's been going down, it wants to go up. And since we've been selling off even more because of this rates thing heading into earnings, I'm starting to wonder if we'll just keep selling down until earnings. It's only a $500 billion company right now. Earnings is in a week. And then maybe earnings is actually a buy the news event. Because again, Tesla just reduced 10% of their workforce. They lowered their subscription service to 99 from 200 a month. And so we're going to see improvements in margin in Q2. I don't know if they're going to forecast for that, but we are going to start to see these things. And Q2 is historically a better quarter for Tesla. We'll see if it is with rates down. But if it's not good in Q2, I think the narrative's going to be there for Q3. So I'm still a buyer. I'm just going to keep buying. I hope we drop more. I really want to close that 146, 145 gap. I think that probably should just happen because we're so fucking close. And there's not a lot of price action underneath here for the volume profile when you look at it. It's very sparse. So, but again, super old, oversold conditions. Can they get worse? Yes. Anything below 145, I'm just going to keep gobbling it up. Just like I put 30 or 40,000 into it today. All right. Bitcoin. Hi, Jesse. Hey, Sud Hakar. I hope I'm not butchering your name, bro. BD, Tesla weekly expected move. Next week earnings, low side, 142. Yeah, again, maybe it goes lower. I don't know. I don't care. I hope it does. I just wanted to reiterate this too with Bitcoin. I think I posted about it, but we're looking at a potential for about what I believe is 15% or less downside over this next year on Bitcoin's price. And I believe that the upside potential is anywhere from about a 40% to 137% over that same year. And I honestly think it's 137%. So I wouldn't, with the halving being 3 days, almost less than that now. Ticker's getting even lower. It's getting towards 2, a little over 2. I wouldn't want to be like not in Bitcoin or Bitcoin related investments right now. I just think that would be a really stupid idea. All right, let's see if I can click on this here. You're going to pull it up? Thank you. About time. Come on, Mac. Don't start turning PC on me. All right. So again, I said for a while, we're seeing some bouncy bounce in after hours. MicroStrategy up 1.13% in after hours. Like that. Like that I'm starting to see some of that. This one on the weekly, actually nowhere near oversold. During the daily, it looks a little bit better. It's getting near oversold territory. But I don't actually know if this has to go to oversold. It could. Maybe tomorrow we drop underneath. Maybe we hit this 1100 range. Maybe by some crazy downward shit, we get towards like 1,000 or even 900. I would just buy the heck out of that, man. Honestly. Willie Woo says, huge BTC bull. Thinks we're going to 650K this cycle. Willie Woo can actually be a little reserved. Last cycle, he was honestly kind of more bearish than most people. So it's very interesting for him to say 650,000. My goal is lower than that. My low target is 150. My high target is 280, and I point that out why in a number of posts and videos. Disease Kodak, thoughts on selling strategy on MicroStrategy for those that want to use profits to dip to buy. I would look at it this way. I wouldn't start selling MicroStrategy in a heavy way until it like gets well above, like I won't even say heavy. I wouldn't start really selling it until it gets above like 2,000 personally. So that's like 80% upside, 75%. I don't know. I honestly till 23.35 I wouldn't be selling a lot of it. Unless, again, you start making a bunch. Maybe you're making like 9-10% on MicroStrategy one day and then Tesla's down 5. But figure it out for yourself, man. You got to kind of figure out your balance and risk to reward. I don't know that I'd be in too much of a rush to jump out of Bitcoin-related investments right now to try and time the bottom on Tesla, especially if rates don't come down in June. That could maybe even just push us down even more. Or maybe they signal that they'll do it in July by that time. But again, rates are shit right now, and Tesla's already suffering from China. So you don't want to see Tesla also suffering from rates here for another quarter. Wouldn't be great for them. So again, just like be ready to put more powder in. That would be my thing. Said Hakar, PayPal waiting for the earnings day. I hope we'll make a good amount of money. Yeah, me too, man. We're going to be really busy with earnings starting in like a week plus here. It's going to be very exciting. Let's finish up on miners here real quick. And then we'll jump over to Fintech. Fintech, like I said, actually managed pretty good. Kind of interesting here. I hadn't even looked at this. So again, CleanSpark dropped underneath. It is underneath this previous line. And let's just look at it on the 4-hour to make sure the line is drawn well. The line could be drawn better. It's actually probably above it because the line is really like here, right? If we go back here and we look at these wicks, this is really the line. So that actually looks bullish to me. So it looks like we found support. And again, just the way this is going right here, this looks like it's trying to do a bullish breakout towards the 17s. Can it go lower? Yeah, I've said it before. It could go, worst case, 26% lower. But I also think in literally months, this thing has at least 73% upside. So, Riot and Mara really getting smashed. I didn't even look at them. We can take a look, though. Let's do this. Let's go over here to my watch list and look up miners. And then we'll put up our little pie thingamajigger. And then we'll sort by percentage change. Cypher. Cypher really got crushed today. That's why I was buying it. It was down 8%. MicroStrategy down 6%. But then again, up 1% in after hours. Riot got hit. Mara got hit. Yeah, Mara did the least worst, but it's also pretty decimated. It's only 4 billion now. Mara's went down a lot, man. So if they can pull around, or if they can turn around their ability to manage their fucking fleet, I don't know if that's ever going to happen. If they can turn that shit around, it might get better. Iron's price action? Yeah, I can look at it. I'll look at Cypher real quick, and then I'll pull up Iron too. All right, Cypher. Again, Cypher was getting crushed today, and at a level that I like. Let me get out of this. So here's what I liked. When it was down, like we're getting towards like this chasm in the 325 range, and then ultimate support at 309. So we're just, to me, the upside potential for Cypher is so good. And let me just show you. Let me just grab something here real quick. I'll do a price range real quick, just to get back to what I think will be like. I think 80% in short order. Like in short order, this thing could do this in 2 to 3 months max. Once the markets start to recover, and if Bitcoin recovers even quicker, it's going to be even better. And then the next fib is 133, and we don't even really hit resistance, guys, until the .618 at 184% to really 200% around the $10 range. That's really when the resistance kicks in. And I'll take a 3x any day of the week. I love Cypher still, man. I'm going to keep stocking. I think I got like 230,000. No, maybe $250,000 in Cypher right now between all my accounts. So loving that. Expect that to do well. Iron. Somebody wanted Iron. These guys holding Bitcoin yet? Do we know? Huh? You guys holding Bitcoin? What the fuck? Let's see here. 613 million. So it's low. It's been pretty decimated. Chart doesn't look super great. Don't really love this setup. It just looks like a rollover. But it's also finding some volume here. If it goes under it, though, then, we could go to 4. But if we can start to recover, then this one should do all right, too. The only thing, again, I'm just gonna look at Iron here onto this list. Here's the only thing, and maybe it looks better than it looked in the past, but I just want to look real quick here. Oh, what are we doing? There we go. So revenue growth looks good. It's choppy, a little choppy. You compare this to like CleanSpark or something like that, or Mara, or even a Cypher, and it looks choppy. I don't love that last quarter they couldn't make money. Don't love it. I know these guys have some estimates of growth too that are good. I know they're energy efficiency, and I think these guys are doing like the AI front thing too and all that. But their EPS, again, like I don't have clear guidance on where that's headed. And I love that their operating expenses are going down, again, because of efficiency with miners. But as far as I know, these guys have dick for a Bitcoin stack. Let's look here. Bitcoin holdings. I guess they have some now. What is this? Q4 2023. So they've got 31 Bitcoin. That is just such a pathetically low number. And again, they're not benefiting from the upside. They're starting to stack. They should have been doing that a year ago. I'm sorry. And when you look at this company and you just compare that to like, let's look at CLSK or Amara, and you just see how much better they're doing already. Again, stacking Bitcoin is where it's at, guys. Let's look at the net income for CleanSpark. CleanSpark netted $26 million. their revenue looks consistently growing. You can see a steady, nice uptick in mining hash rate. You can see their total costs dropping. You can see operating expenses dropping even more. And most importantly, you can see a Bitcoin stack that has changed value substantially from Q2, where it was $14 million, to $127 million. That's a big deal, right? And these guys have a goal to early 2025 of being the largest Bitcoin miner by hash rate. Let's look at Mara and compare them against Iron. I don't even like Mara. What do you want? Are you bullish on miners after the halving? I am bullish on the miners 3 to 4 months after the halving. I don't fucking know what's going to happen before. I don't even pretend to. If we keep trading down the way we are, then I think we stand a greater chance of having a buy the news event instead of a sell the news. If we were at 92,000 before the halving, like I thought we were going to do, a month ago, then I would think it was a sell the news event. Right now, I'm thinking maybe it ends up not being much of a downside risk at all, and it ends up going up. Kumar, Jesse, I will ride along with you for Tesla June option 2026 calls. What do you think about folks like Guru Gavin and others waiting for Tesla to drop to $45 to $85? I think that's fucking stupid. 45 especially. That's just retarded. You got to be a special kind of fucking dumb to think that. I don't know if he actually thinks that. I think he'll buy it beforehand. He's probably just looking for a headline to get himself some clicks. I put a video out today that talked about $69. I don't think that'll actually happen. I hope it does, though, because it'll be so poetic if Tesla topped out around 420 and then bottomed around 69. It'll just be beautiful. But anyway, back tomorrow. So what I wanted to show here is look at the wicked growth in their revenue recently. Their net income paled over dominated over CleanSpark's with $223 million. These guys weren't even running half their shit. And the key difference here goes to Bitcoin holdings again. Theirs haven't increased at the rate that CleanSpark's has quarter over quarter here recently. But again, in US dollar amount, they're at 639 million, which is a huge number. So they've done well. You can't even see it in a lot of these charts, just how they've mismanaged so much with their mining fleet, and yet they still look good when you look at these charts. And even Cypher looks better. So again, like when I could compare this stuff to Iron, where Iron lost money again in Q4 of 2023 because they don't benefit from the FASB accounting rules, but I see 26 million in net income from CleanSpark. I see 223 million from Mara. I just can't compare Iron to them. I just don't think they're going to do as well. All boats will float. So I don't give a shit about miners too much. But my money right now is CleanSpark, and it's with Cypher. And there might be some other plays like maybe Riot and Mara that are interesting because of their Bitcoin stack. But I don't give a shit about the rest, guys. I just don't. Not anything I care about. All right, so I think we beat this dead horse with Tesla, mining, all this other shit. Let's move on. Let's go to PayPal, see how PayPal did. Just work our way down our list here for Fintech. So PayPal actually just ended like barely down 0.13%, down 0.19%. It was up almost like 0.5%, I think, at least today. Again, finding support on this volume for the second day in a row. I think PayPal's doing really good. And we're going to find a bottom around this range. If we don't find it where we are right now, I think 62 is probably the bottom. I don't think there's a lot of downside risk here, so I'm not too worried about it. Definitely not buying January 2025 calls, especially for the strike that I have them at. But I loaded the boat and added more 2026s today. I think like $20,000 worth, maybe, or maybe at least 10. Let me see here. Matanga. Hey, Jesse, could you look up... Oh, I'll look up that in a little bit here. Bearish, how does Riot look? Riot is all right. I can go back to that in a second. George T, that's right, baby. Intelligent Computing, Rex Finance YouTuber, thanks. CLSK is going to $1,000 a share by 2030. Yeah, I don't go out that far. I don't care. I won't own that shit after like $100, probably, unless the momentum's so great. BD, Jesse, can you explain Mr. 100? Invest Answers just posted again about Mr. 100 snaps up $7,640 in BT. You got a dollar symbol, but you got 7,600. Did he? Okay. 7,640 BTC. I think it's a nation state, but essentially somebody is buying a lot of Bitcoin and putting it in a wallet every day. For a while, he was doing like 100 Bitcoin a day or something, but it's been going up and up and up and up. Maybe he bought the dip. 7,640 would be a fucking lot. A lot. Anyway, back to PayPal. So I think we're really close to the bottom. I'm going to continue to buy. I think that the January 2026s look juicy. Even if I don't make a lot of money off the January 2025s or they go to dust, I think in the end, I will still make a lot of money off of PayPal no matter what. And I still think that the January 2025s can do all right. But we got to start moving. We got to get some really good earnings. We got to start seeing some positive shit. Otherwise, they could just go to zero. So we'll have to see what happens there. All right. Hood. Let's see. Did Hood close positive? It was doing good all day. Hood closed up 0.7%, up 0.17% in after hours. And the thing I love about this right now, guys, is that it's above the fib. So maybe Hood has found its bottom. I think there's a pretty good likelihood that it has. Hood. Anyway, so that would be 78, or I'm sorry, like 75% upside maybe from where we're at. 76 upside. So that's a good number. Not as asymmetric as what I'm looking for right now, but I will dump more money in Hood if I make some off my asymmetric bets. And again, I've got like $70,000, $80,000 for cash buying. Let's look at SoFi. But yeah, I think it's good that this one at least is trying to find support. And I think Hood is going to benefit from transactions. All this volatility is giving them more revenue, guys. All right, SoFi up 1.12%. Again, looking strong under this little box right here, and the 100 moving average that's curling up, and this previous downward resistance up another 0.14% in after hours. Just looks good. Good stuff here. Let's look up Palantir. If I can. I don't know why this is taking so long. I think it's Trading View this time. Excited for Hood earnings. So am I. Super excited. Palantir down in 0.09%, down 0.14% after hours. Looks like it's trying to find support above the .786, building up a little bit of volume over here. That's cool. I mean, again, it acted as support over here. So I would argue that if we can start to see a bottoming pattern over here and maybe finding some support, that we're going to start to have a bullish divergence on Palantir. And so maybe Palantir, maybe like the 21 is as low as it gets. It's possible if the market shits the bed though later in the week because of, again, further concerns from Israel retaliating against Iran, who retaliated against Israel, who retaliated against all of Iran's bullshit and going back and forth a millennia, then, if they just keep going back and forth, maybe this gets worse still. But it looks like we're trying to find support, so we'll see where we go. That's kind of cool. All right. Let me pull up some of my other stuff I do. I bought Matterport today, too. I bought DLO today. I think it was DLO. Yeah. I didn't buy any Flux, but I did buy Matterport today. Matterport was down 2.7%. Again, majorly crushed as a stock. After hours, it's up 0.56%, but all in all, it's still down like 95% from its stupid high back when did this one SPAC? I don't even know. It might have. Just its high in 2021 when everything was just irrationally exuberant. Anyway, so I don't love this. 3 Black Crows. That's a bearish pattern. So maybe we aren't done finding the low on this one yet. If we did go lower, it's going to probably be down here. This previous resistance line that turned into a strong layer of support, I would expect it to be support again. So maybe Matterport bleeds down to, $1.20. That would be low. I'd gobble that shit up. I think I have about 28,000 or something right now. I will get more calls. They're in January 2026. And I believe pretty good that we're going to be supporting the market hard in the latter part of 2024 and January 2025. We're going to be doing everything we can to boost markets and keep things going. So all about that. DLO. Bullish divergence on the weekly for Matterport. RSI, though. Yep, that's true. It could be like maybe it's a little double. Maybe if we shorten the time frame, it looks like a W bottom too. It can happen. We shall see. Real quickly though, let's look here at DLO. DLO was up 0.45% today. Not bad. Again, just trying to hold its own above peak volume. That's probably good. And if we look at the weekly RSI here, let's look at what that looks like. Looks kind of like it's got a bullish divergence that's formed back going into December of 2023. And if we look at the daily looks like it's probably finding a bottom here too, getting slowly higher. And again, yeah, having a convergence for the upside move. So DLO looks to me like it's trying to find a bottom. Broader market, though, is going to drive that. All right, let's look at Flux, too. I think that got hit. I think I'm still up on DLO and Matterport, which is crazy. Flux might be down, but I also bought this one pretty heavy because I liked the due diligence from Rex. Jesus Christ. My brain isn't working. So anyway, I kind of like what I'm seeing here. So if you look, I probably should have bought the dip on Flex. So you can see where it was down quite a bit here on the daily. It was down to like 438, and it climbed back above the 50 moving average, just poked its head right up against the fib. It looks very bouncy right now. And it closed up 0.2% today. So I don't know, maybe I should have bought that dip. But again, I got like 55,000 in it, and I don't know. That's pretty good. All right, what else do we have? ArcG. Got to do ArcG. I bought more ArcG today. I think I bought like 30, 20, maybe it was 20. I don't know. I don't know what I finally closed with, but it might have been like 20. This was another one I bought a lot of today. Again, it's below this previous like resistance line from the way back that we've tried to turn into support. We're able to for a little bit, haven't been able to now. Maybe we even go down further, but I think the downside risk is a W bottom on this one. I don't think it's much lower than that, unless I'm really wrong about the markets. The markets could drop, I don't know, another 3 to 4% maybe for the broader markets across some of them, but I think most of them are starting to find a bottom, and I think a ton of indicators are showing that. But so maybe we have another 8.56 on this one. I will continue to buy those January 20 to 26 positions because I think that those are going to turn out to be really good. All right, now let me look here. I remember what I want to be pulling up, but I'm going to try and pull up your guys' stuff too. One sec. I'm not seeing my doc, my other doc here, so I'm just going to grab it. My chat doc. Where are you, chat doc? Chat doc, I'll be back. What's up, buddy? Huh, it's gray, though. Why are you gray, chat doc? Work. Oh, you're back. You're back. Sweet. All right, so I'm going to line this up at the top, and then I'm going to start looking through the list. Matt R., thank you very much for joining. To all you guys who join or continue to subscribe, I really appreciate you guys. Thank you very much. Subin, what's good, Jesse? All kinds of stuff, man. I'm actually really liking the day. All right, Will Dumont, can you look into... Yep, I'll do that in a bit. I'm going to start at the top, though, with the ones that got here first. And Rishab Singhvi, if I'm saying it right. Hey, Jesse, love the daily videos. Thank you. Thoughts on... is that Lemonade, or is that INMD, or is that LNMD? Let me see here. Is it this one that we're looking at? I don't remember what Lemonade's. I'm going to say it's this one. In mode. I know we've talked about this one a few times. So it looks like it found a lower low since the last time we talked. So it didn't find its bottom yet. Let me see if I can redraw this, though. So it did go further. And it is down a lot. It's down 82% from its high back in November of 2021. So this one's also one that's been hit a lot, but I don't remember the financials on it. So let's look at it real quick just to see what its valuation is, because a high valuation, and I think I have this on my list. I haven't been too interested in that. I just want more capital. I want some of my existing plays to work out so that I can start talking about other things to invest in. All right, so revenue, negative 5%, not a super great number. Getting a little toppy the last 2 years, maybe in that regard, but net income climbing, 197 million in a year. But the valuation on this is 1.5 billion. PE is 7. Forward, I don't know if that's right or broke. I know there's supposed to be a fix for it. But it's definitely, the valuation's low. I mean, the valuation's low. Could it get bouncy? Sure. They don't have any real debt to speak of. They've got lots of cash. Even if we look here, I mean, that's not bad. They're doing a little bit of share dilution, not a ton. Operating expenses have been all right. They do have positive cash flow. And again, they're netting $56 million a quarter. That's not a horrible number. The valuation isn't bad. I think the guidance, though, being just a little bit lower is what is probably slowing this down and just keeping the PE ratio low. If this company, for some reason, outperforms their forecast, though, if you have indication to believe that they're lowballing it, then maybe this is a good investment and you should probably look into it further. All right. Intelligent computing. I hate to say it, having recently put a good chunk of change into BITS, Cypher, and CLSK, but it feels like 52K, 54K BTC is in play. Not a lot of dry powder left. I don't know. It could be 57 is the first stop, and then 52 is the next. It could happen. I don't know if it's as likely anymore, but it could happen. Intelligent computing, is this the final scare shakeout before the halving? I think it could be. Intelligent computing, $200 million market cap quantum computing company RGTI appears to have found support, possibly forming a longer-term double bottom with potential 5 to 10x upside over the next 12 to 18 months, question mark. Yeah, let's look at it. Which one was that ticker? It was RGTI. Let me pull it up. I think I have looked at this. Maybe it was a different one that you brought up. No, it was this. All right, so this company, I mean, it does look like it's finding something under key volume. I mean, it literally bounced right off peak volumes, right? So at $1.06, it looked pretty good. It's up 12% today, 1% in after hours. It's a $191 million market cap. Let's look at them over here. It does look bouncy. I mean, just looking at the price action today, it looks bouncy. Riggedy Computing Incorporated. Now, revenue is $3 million. Valuation's 191, and they're losing money. They only lost $12 million in last quarter. What are the estimates, though? Not super great. It could be bouncy because the valuation isn't super high. I don't like the cash burn. I don't like the share dilution. I don't like the negative cash flow. I like that their operating expenses have come down, but they don't seem to know how to make money. They only make $3 million in a quarter, and that's probably not getting a lot better. And they're almost a $200 million company. And they pay, their stock-based comp is 109% of revenue. So they pay themselves, which is good. That sounds like a good quantum company. Pay yourself first. I don't see a lot of buybacks recently, but I did see a huge sell in Q3 of 2022. What was the price then? Q3 of 2022. So these guys are pretty good at selling. They sold around 250. Maybe they bought back in a little more around 38 cents. I don't love it. I don't love it just because of, again, just kind of being so flat. That part I don't love. And being negative and burning through their cash. I don't love all that. Personally. All right, let's see what else we got. I'm going to look at current comments and then go back to the past year too. Subin, what's good, Jesse? Okay, we saw that one. William Demont, can you look at... Oh, that's another request. Intelligent computing, appreciate you, Jesse. See, list intelligent computing, when you've been out of a bull market for a while, it can be easy to forget that they can be very hard with pullbacks. Yeah, here's the deal. Any new companies coming onto your radar? There probably is. This week, I think I will do at least one video, members only, with a stock that I am buying. But I got to see some bounce in some of this shit first. Or it's got to, the risk to reward just has to be so much better than the other stuff I got. Gartov 33. Does anybody know ARM hold as its earnings day? ARM is such a shitty company. I mean, I should say this. I shouldn't say it's a shitty company. I think its valuation's too high. And I'll look at that in a second, and I'll get back. Let me go back to the other comments here. Intelligent computing, Palantir hit the .786 on the trend. Yep, talked about that. Yep. Looks good. Intelligent computing based on RSI divergence, VR lobe, other TA. Looks like 30% downside risk. 4 to 6. Yeah, I think Palantir is going to be a good one going forward. Oh, but you're talking about CSIQ. Let me take a look at that one. Nope, don't have it. Let me pull it up. All right. Let me get this one here. I can tell yesterday's viewers, I don't know what we're going to have for the max for today's session, but I wanted to point this out. Yesterday, I had almost 500 viewers. You could tell people, even though it was a drop, were a little more optimistic. What I've noticed is when the pain gets really bad, viewership drops and the diehards are still around because other people literally can't handle the pain of even watching. So right now it says we have 300 concurrent viewers, and I don't even think we got to 400 today, and we almost were at 500 yesterday. So again, I find that kind of fascinating. It's just some anecdotal evidence for, I think, people are getting tired of looking at it. And that usually helps signal capitulation. Canadian Solar, so these guys are getting fucked too. I don't know anything about this company. I don't know about the solar industry and what kind of subsidies they have in Canada. I don't know if you have any information on that, Intelligent. But they've obviously been hit pretty bad. Let's look at the financials here. You're right, the monthly RSI is getting close to oversold. Could they go down, though, to like 13? Maybe. That would probably be, if this isn't a shitty company that's dying, that would be a very interesting place. Yeah, so let's look at the actual financials. Maybe this will be one of the ones we talk about, if it looks like there's hope. Yeah, so if you have any comments, Intelligent, on this one in regard to like recent earnings, forecasts, anything I should know. So it looks like they're still suffering. And from what I heard from the Canadian Fed, it sounds like they're kind of going to stick, I think, close to what our Fed does, at least for now. So revenues are dropping, just like Tesla's dropping, just like the entire auto sector is dropping, just like homes are dropping. All this stuff I've been talking about for like 6 months at least, if not a year, closer to a year now, at least 9 months probably. So it doesn't look great. It doesn't look like they're going to be making a lot of money. They're almost $1 billion company. Their PE is 4, which is low, and their cash is building. They did do a little bit of dilution. Cash flow is negative for free cash flow. So it's not a great setup, but man, when it turns around, this might be one where this might be a decent option play. I'm going to add this to my list of ones to review. This might actually end up being at the top of the list, just as like a starter pack, like I like to call it. So just because if solar stands a chance of rebounding for these guys in the future, as rates come down, if their economy isn't complete shit, and I need to understand their economy a little bit better. Yeah, Canada holding rates for now, yes. Sorry, I don't have additional info on CSIQ beyond what you're seeing. Okay, so I probably need to take a look at Canada's markets to figure out what kind of subsidies they have, and then also like how bad their economy looks at, like compared to ours. Likely made it here with liberal socialist subsidies. Yeah, I'm sure the question is, can they keep doing them? And will they still be pushing hard for solar in the future? Canada's quite a bit up north. So I need to understand this business probably fundamentally better, and then a little bit more on Canada. But just from a bounce perspective, I mean, the PE is fucking 4. So if this industry looks like it could come back, and it looks like they're going to be benefactors of some of that, and I don't even know if they're all in Canada or what they are. I'm assuming with Canadian Solar as the name. But maybe they could bounce back pretty hard. At the very least, this could be an asymmetric bet if the options look as enticing as this poor stock, especially if we get lower. So I'm gonna put a few alerts on this one, just because, again, the PE ratio can only get so low. Single digits, pretty fucking low. 4 is pretty low. So we're going to save that one. That's a good one. Thanks again, man. You provide very interesting stuff to look at. All right. SoFi, finding support, consolidating, 100, simple moving average. Yep, probably. CLIS, EMR, Emerson Electric from yesterday, please. Oh, okay. I'll make sure to get that. EMR. Let's look it up here. Let's see here. Disease Kodak. Did you forget to chart MSTR? I went. No, I looked it up. It looks good. It looks good. It looks like it's finding support. It could drop to the 1100 range is what I said, but no, I didn't forget. I did it. Look closer to like when I was doing Bitcoin and stuff right after all the economic things. You'll find it right there. It's one of the first ones I did. I think I did it right after Bitcoin. EMR, Emerson Electric Co. 22% revenue growth year over year. It actually kind of looks like it's in decline though. I think I looked this up. Let's see. We're seeing revenues coming back up again. So hopefully we just had that big dip and it's starting to go up. EPS looked positive. Okay, I think you're saying I looked this one up, and not that I missed it. Net income, what was it before? 744 million, but this last quarter was light. And it could go back to the 744 again. So that's a lot of income. But it's also a $63 billion company, and the PE is closer to 6. This looks pretty good. This looks like a pretty decent play. I'm not sure why their cash and debt switched up so much recently. It looks like they've been buying back a lot of shares. The only thing I don't love here is they had a massive increase in net income. So they're benefiting from some of the higher rates, I believe. And maybe that could continue for a while. Somebody started buying stock back in Q4 of 2023. So that lets you know they think it's undervalued. And then this last quarter, we saw a tick up in institutional ownership. So, and there's not a ton of short interest. So it doesn't look like the company's failing. And it's a low valuation. Stock-based comp is only 1.8%. We like to see that. The thing I don't love is just it's probably like this operating leverage chart where you can see that revenues just aren't getting a lot better and that some of their base costs, I don't know why I'm not, oh, there we go. It's just delayed. Maybe it's my internet. But again, kind of seeing a trend downwards with expenses kind of going up recently. So maybe, I mean, that's not what I love to see. Outside of that, let's look at the price action over here. But yeah, so I don't know. It's undervalued, overvalued. I don't know. What was the ticker on that one? EMR. And let me see what time it is here. So I do have about 10, 15 minutes, and then I will have to go on this one because today is Taekwondo Day for my daughter. And I love her dearly, and I don't like missing that. Trying to make family first above all else. Yeah, so this one's done really good off the whole energy play. Could it keep going up? Sure. Do they have a dividend? They do have a dividend. So that's nice. I wouldn't hate that. So, I mean, this is kind of what I like to call a steady Eddie. Looks like when the economy really takes a shit, it'll go down. 58 to 24, 78 to 37. So it can get cut in half if the economy takes a shit. But it's been a nice grower and it's got a dividend. So, I don't know. I think their pricing power is going to start to get weakened, though. I will say that. All right, CLIS. GE Verona, a new GE spinoff that makes turbines to complement the electrical generation and distribution. Please, the theme of us needing more electricity from more sources and its distribution, I mean. Okay. GEV, let's look at it. I think I don't remember what the valuation was. I thought I looked at this. Let me see if I did. Okay, so we got that. Let's put this up here. Oh, that wasn't right. What was the full name on this one? Vernova. Let me just try that. Oh, maybe I can't see it in here yet. No, I can't. I will talk to Alejandro. I don't think I can look this one up, at least from the financial standpoint, which I like to do normally. They do have a $35 billion valuation. And if I'm looking at the data down at the bottom here, let me do more financials. It doesn't look like we have a lot to work with here. I don't have access to quarterly data for some reason. But yeah, so it looks like, let's see here, revenue in total, 28 billion. Or I'm sorry, wait a second. Let me get, yeah, 28 billion. But what is the net income? Let me look here. It's just EPS. So it looks like net is, for the whole year, was negative 438 million. So I don't know. For not making money, a $35 billion market cap seems high. I probably wouldn't touch this right away, personally. And we'll get this added here. Alejandro will get it fixed. So we just need to get GEV fixed. All right, ASML, please, Jason. Sure, I can do that. Still grinding above the .618. Doesn't seem to be impacted by a lot of what's going on. Up 2.31%. Finding really good support. I'd be surprised if this, I mean, technically we're getting some divergence here, so maybe it could break down, but it seems like it really wants to go higher. It's a $381 billion. $381 billion. That's a lot of money. Let's look over here. What is this all valued at? Wow. Since 1951. That's a long time to have some GE stock. Crazy, man. ASML. So up 13%. Revenue growth year over year. Net income is $2.2 billion. Cash looks good. Shares outstanding are going down. Estimates are dropping a little bit over the next few quarters. And what is their valuation? 46. 44 forward PE. That's pretty high. I don't know. That's pretty high valuation. I would say that there's probably more downside than upside looking at that. And so maybe this does turn into basically a bear flag, right? Where it's kind of going up this way when you've got divergence going to the downside. So looking at that, I'm like, I don't know. I don't love it. All right, let me see what else we got here. Hey, Jesse, thoughts on $35 January 2025 puts on GM, General Motors? You'd have to look at my options video if you haven't already, Logan. I haven't looked at these, and so I'd be guessing. Some people, though, the bigger names are ones that people follow a lot for like long calls and long puts. So it might be something where you just don't get that good of a return from it. Albert Pav, hey Jesse, about strengthening the dollar. It's bad for economies globally, but it's good for non-U.S. investors as it works as a multiplier to gains. Yeah, it actually, I would say, sucks a lot more than it helps. We don't want a strong dollar right now. Anybody in the U.S. doing business overseas is getting less dollars back. So, like, again, it's going to hurt. It's going to hurt companies like Tesla. It's going to hurt anybody with international business. And at the same time, more importantly, we're destroying currencies around the world. We're putting them under tremendous amounts of pressure, like the Japanese yen, the Chinese yuan, the Russian ruble, and many other countries around the world are just getting crushed. So I don't know that we want to say that it's a positive. I really don't think it is at all. Albert, but that also works in reverse if non-U.S. investors advise U.S. company stocks when the dollar is high. They get, yeah, true. That's true, Albert. Mr. Castorano, hey Jesse, was only able to listen to half of yesterday's recap. If you didn't hit shop, can you take a look? If you did, tell me to pounce on sand. I did not. I can take a look. Shop is a good company, but I don't know how they're going to be doing in all this. Looks like they're trying to stay above the .618, but we got clear rejection off the 200 moving average on the weekly, which is bad. Yeah. $88 billion. I'm curious. Let me look over here at the financials again just to see what guidance looked like in fourth quarter. I could just see, I don't know. This could do all right for a while. It looks like gross merchandise volume up, payments volume up, monthly recurring revenue up, revenues up, net income 700 million one quarter, 600 and something the next. Cash flows positive. I mean, all this looks good. What is the estimate going forward? It looks all right. The PE ratio is 769 because it's an $88 billion cap with 24% revenue growth. Depends if they can get that net income up higher and higher and higher. Does that PE ratio seem right? I'd have to do the calculation. I don't know. I do think that technically, and it looks like if any of those numbers are right, fundamentally too, it looks like it could roll over. The 50 is still climbing really hard here. It had a great run from $23 all the way up to this tweezer top above the 200 moving average, all bearish shit at 91. So you went from 23 to 91. I would have been really happy there. Again, you kind of you've mean reverted all the way back here to like, I shouldn't say mean revert, but you started to hit resistance at these other levels here. And then again, it would be hard to get like above the 100 range psychologically in peak volume. So it kind of makes sense that this is getting slammed down at the 200, rejected off the .786, and that it wants to go lower. I would say at least to 64, if not to this next fib at like 57. How well did these guys beat earnings? Like pretty consistently, I think. Yeah, consistently since they weren't back in like July 2022. All right. Let me see here. Let me see. Dustin P11. Oh wait, Mr. Castellano. Nope, that was you. Dustin P11. DXJ. Thanks for the great content. Do you look at ETFs? This is a Japanese ETF, but wondering if I should take some out. Been DCAing since the $60 area. Heard you say yen is looking weak. Yeah, it's super fucking weak, man. It's like going back to the 80s weak almost. And what was that again? DJX? DJX. Let me look at it. I don't think I've ever pulled that one up, so let's do a copy. All right. Is this it? The 1/100 Dow Jones Industrial Average Index? Is that the DGX or DJX? Or are you looking for something else? Or DXJ. Oh, I'm dyslexic. All right. I'll have to fix that later. All right. Let me do that real quick, actually, first. Before I forget. All right. Whoa. Yeah, this looks like it's done good. What is this again? Wisdom Tree Hedged Equity Fund. BTC miners are pumping a little in after hours. Good. Hopefully the whole market starts to recover. Shit, dude. What was this? March of 2020. This thing got crushed by the pandemic. Went to $34, then went all the way up to $109. I would say there is a safe bet that is a really good level. And you shouldn't be too picky. Let me try this. Let's just see what this does. So we'll call March the bottom. We'll call this the top. We'll call this the bottom. Yeah, you're getting rejected at this fib level. I don't love it. I would, just at a glance, man, I don't even know what this is. I would get out of it. C-list, thank you, man. For today, you only had one stock covered. Cool. Well, thank you for joining, bro. All right, yeah, I don't know. I don't love this. It seems like it wants to reject and at least touch the 50. If you made a lot of money off this, man, unless you know of a good reason why it's still going to go up, maybe take some money off the table and look at some of these awesome asymmetric bets that I keep talking about. Michael Myers, looking for group. About to start a tattoo and listening to my dude Jesse. Let's get this money. Hell yeah. Tyler H, let's go. Tyler H, hey Jesse, what do you think about levered ETFs? Still like TSLL for small accounts. That's always, thanks always. I said yesterday, I think, on this one. So I think it's an okay play as long as you realize that it's got theta decay. So if you're good slowly dialing into this, just realize that when it does go really, really high, over a fast period or a short period of time, you should probably look at exiting and switching into Tesla stock. So maybe talk to me later around that time. But it's okay. I mean, it's a decent bet. Intelligent computing. Hey all. Jay the Savage. Loud and clear. Okay, cool. That's good. Alexander Felskov. CLSK. Already did that. Smash the likes. Hey, smash the likes, guys, before you leave. I know some people already did. But if you could do that and just, again, all the things, that would be great. What time is it? Okay, so I got about 5 minutes here, and I'm going to have to bounce for my daughter. Lisa Marie, good day, Jesse. Are you aware of an ordinal that could be worth $50 million to a miner? I believe it'll be on the first block mined after having ability to etch a personal historic moment. Maybe. I don't really care much about NFT shit at all. It's like Garbage Pail Kids or baseball cards or something. It's like, I don't care about any of that stuff. I don't know how much it matters. Maybe one of those will, though. I mean, for a while there were people, I forget the guy's fucking name, but he was making NFTs like $100 million or something stupid. So who knows? But I don't care about NFTs at all. Not right now. I care about them maybe in their final form, which I don't even think we're close to. Bearish. These miners really kill me. It's crazy. They are not fun sometimes. Can you do GE to round out the electrical theme? Yes, I can. I'll do that before I go here. All right, let me just keep rolling down the list here. Heinz in Meet Kevin did a bearish podcast about banks last night. It was interesting. And yet, yeah, okay. I'll have to see what it is. I won't discount it right away. Sometimes he has good, valuable information. I just think he's super bearish right now. And I don't think that's going to turn out well. It has the last week, but I don't think it will over the long haul. Disease Kodak. I hope BTC and MSTR go up this weekend. Me too, bro. Intelligent computing. I think B of A is one of Warren Buffett's Berkshire Hathaway largest holdings. Well, hopefully he's doing his due diligence. Here's the deal. I would like your perspective about TSLL also, please. I already gave that. CLIS. Denmark's historic stock exchange building from 1625 burned down today. Very sad. Beautiful building. That sucks, man. I'll have to look that up. Intelligent computing regarding TSLL. If you're willing to accept 3x the downside, yes, exactly. It's a multiplier, right? It's like an options play. You're looking to get a multiplier of gains or losses. The only thing is, like, you have a certain, yeah, I guess you have the same thing. You got a calculated risk. Whatever you have in it can go down 3x, and it can go up 3x. But there's also going to be some theta decay, where if it just treads sideways, it's just going to burn too. So you got to remember that. Gavin24, did you ever speak about what you did? Or I did that. Gavin24, haha, free money. Sudhukar, hi Jesse. BD, Tesla weekly expected move for next week's earnings. Low side, 142. Yeah, sure. All right, I think I'm pretty far down in the list. I'm going to do this GE one, and I think I'm going to bounce, guys, to spend time with my kid. Actually, jet engine theme more accurately. GEV has most of the electrical generation equipment. Oh, okay. Let me just pull up GE2 here. And then time to bail. All right, GE Aerospace. $171 billion organization. It's had a pretty decent run here. It's above peak volumes, though. Let's look at the actual financials, though, because I think they'll speak loads. If I remember correctly, so 16% growth, but again, just kind of selling growth through selling off parts of the company, I think. I don't know. None of this looks super great. P ratio is 15, forward PE is 37. Just kind of a shrinking company. Selling more than buying lately from insiders. Not super great. Institutional ownership is non-existent. Is that right? That's weird. wonder if that's broke. Short interest shows nothing. I don't know. Alejandro, maybe take a look at that. That's weird. But let's look. Stock-based comp is 7% of revenues. That's too much for a company this old. I don't know. It just kind of seems like they go up a little bit and they go down and they go up a little bit and they go down. But the general direction seems like down, maybe starting to trend up in revenues. While finding a base, I don't know. Yeah, GE Aerospace, you're right. If I had any GE, I would be selling it. Oh, fuck yeah, I agree. I'm going with intelligent computing on this one. Yeah, you're 1951 Aerospace. Yeah. Yeah, I'm going to have to agree with intelligent computing. You got to keep some of this if you're nostalgic, but it might not hurt to get the fuck out or sell some of it and buy like some Bitcoin shit. That's what I'd be doing too. In 01ZH, hey, thanks for joining, man. Really appreciate it. You should be able to comment. People that do starter pack, you'll be able to ask for one stock request each daily market recap. And if I miss you, just the next day, I fire these things up early in the day. Put your comments in earlier, and then I'll get you the next day. But I catch up with everybody and usually get your requests within 24 hours, and everybody gets to participate. So it works out pretty good. So if you release a starter pack, paid $2.99 a month, you can do that, and you can chat. Circa 30 years before I was born, slaughter the sacred cow. Thumbs up, peeps. All right, guys, I think I'm going to bail. I'm going to go hang out with the kid. Love y'all. Hope you guys are ready for more downside tomorrow, but also have been able to capitalize off the potential upside that I think is going to be coming. So good luck. Wild Frenchie, bonjour. What did I miss? You coming right now again, Frenchie? Seriously? Go back to the beginning, bro. You guys take it easy. Have a good night. And I will talk to you later. Bye.